The Bank of England's rate decision is in. Donald Trump is profiled by the Wall Street Journal, and Stormy Daniels gets a hit. Consumer discretionaries versus AI also see where's the reality of pain. On top of that, home equity reports of those seriously underwater, not looking that great. And if you're looking for immigration concerns in the United States, well, let's just say immigration could be the reason you might not see rate cuts declining this year. And that includes illegal immigration. Let's get started there on today's Meet Kevin report. So the permanent population increase from immigration ultimately is concluded by Bloomberg to create a net positive demand shock, ultimately boosting prices and wages. The problem is, it takes years for a new group of people to actually solidly integrate into an economy and create that productive boost that you would expect from GDP. In other words, I think the way I like to think about it is, imagine you had a factory and you added on another part to the building and you stuck a bunch of people and machines in it. It takes a couple years for that part of the factory to actually really start firing on all cylinders, cranking out goods and services. But in the meantime, it feels like you're spending more money on that machinery and on human capital, basically creating this feeling of stagflation because your wage expenses are up, your goods and services, well, your goods on the machinery expenses are up, so it feels like prices are up. Remember, prices and wages going up. But you don't actually have the output yet. That's just an analogy that I like to use, but it basically mirrors what Bloomberg suggests. They see that the 7 million immigrants that have come into the United States between 21 and 2023, which have included 5 million who do not yet have lawful residence, are going to create stagflationary effects for the next 2 years, leading to the likelihood that we'll have higher interest rates for longer. Now, again, in 1 to 2 years, maybe we'll see a stronger economy, assuming we don't go into a recession before that. Now, the part about going into a recession before that is my opinion. Bloomberg suggests it's going to feel like stagflation, and then we'll go to boom. And I'm kind of like, well, who says we got to go from here to here? We could also go woohoo, especially as those higher rates hit. And that's something Bloomberg hits on as well. They suggest that the lagged effects of high interest rates could hit at the same time as the higher spending on labor and higher spending on products while productivity falls and housing becomes more expensive, and minimum wage hits take longer for businesses to actually really integrate into their businesses to increase and boost productivity. So, in English, rents up from immigration, more housing problems, higher for longer rates, at the same time as wages and prices are still going up. It's going to feel a whole lot like stagflation, leaving the Fed not to act as soon as we might expect, thanks to immigration. And 70% of that immigration is coming through that southwest border. So immigration clearly an issue, but at least today, per the Atlanta Fed, GDP is not an issue, with GDP currently sitting at 4.2% per the Atlanta Fed. Now this, I think, is, dare I say, almost ludicrous, but you can see a picture of it here. This is well up from their estimates of 3.2 to 3.7 in April, and they see GDP at 4.2% in Q2. Absolutely nuts, but they do. Now remember, GDP is not just what consumers are spending money on, because in that case, we'd probably be in a recession. For example, you could see what the president of Blackstone says with, quote, "We see a deceleration of growth. Central banks will be slow on cutting rates, though. So, can you really invest before the all clear sign?" In other words, like, hey, things could get a little dicey going forward here. We got to be a little bit careful. This isn't good. And then you look at companies like Etsy and you're like, maybe we're already in a recession. Now, we're going to talk Etsy, and then we got to get into that homeowner equity report, and we got to talk Trump. Take a look at this. This is what we've got from Etsy. Etsy reports in their earnings call just a few days ago These headwinds are real, and they do not appear to be abating. Consumer wallet remain squeezed. Consumer sentiment remains depressed. Macro quite challenging, especially in the UK and Germany. Consumers feel pressured, seeking value and discounts, and China is providing those discounts. Shout out to Temu there, as well as probably Alibaba and Starbucks. Etsy sellers now apparently feel no pricing power. They've actually been in this situation probably for a little over a year now. And even regular spenders are spending less. Here are the screenshots of it, and we can see a little bit more here. Very high cost of money. Gross merchandise sales continue to be pressured by macro factors, specifically related to consumer discretionary. Remember, this is just one part of the economy. You know, Joe Biden's spending on the Inflation Reduction Act, infrastructure spending, military defense contractor spending, exports, all of those things contribute to our GDP outside of consumer discretionary. You know, continued high prices in real estate, all of those aspects contribute to GDP. So you can have a really weak consumer. The question is, what happens when the other parts start falling in line with recession? That's when you get a real recession. And unfortunately, one of those, and this was interesting too, habitual buyers decreased their purchases 3% year over year. And they continue to observe a trend where some habitual buyers purchase slightly fewer items or spend slightly less and no longer meet the definition of being a habitual buyer. Yikes. So we're really seeing some softness there on that consumer discretionary side. Not great. But at least homeowner equity is up, right? No. Get ready for this report right after I take a sip. While I take this sip, make sure to check out those courses on building your wealth over at meetkevin.com. We had another profitable trading day yesterday. Only up a little over $3,700 yesterday, traded with about 14,000. So percentage-wise, it's pretty good. But had I not fat-fingered, I would have been up about 8K. I was live trading, and so I live traded that 8K profit. But unfortunately, while I was live trading in the Course Member Live, which you'd always get access to, Lauren, Max, and Jack walked in. It's not to blame them. I take full responsibility. I made a little oopsie-doopsie, but I accidentally doubled down before closing my position, and that 2-minute oopsie-doopsie cost me about 4K, but I was still up on the day because we had that many gains. So if you want all my buy-sell alerts, make sure you join that Stocks and Sight course. It's always your own fault. Never blame somebody else. Remember, when you point the finger, 3 fingers always point back at yourself. So double check your trades before you hit that button. I know sometimes it's so exciting. But yeah, live trading, family, and and trying to explain it all at the same time, a little challenging. Anyway, check that out. Think about that. Meetkevin.com. Let's get into the homeowner equity report, and it's an oopsie doopsies. Cheers. Good old Kahlua coffee in the morning. All right, homeowner equity. This is an interesting one. Lowest level in 2 years, and the percentage of seriously underwater homes per a home equity report by ATTOM increased to 2.7% from 2.6% last quarter. Seriously underwater homes include homes with at least 25% more debt than the estimated home value. Now, that's actually crazy because that means you would have had to have essentially almost 100% financing, and then the market would have had to have fallen on you substantially. So maybe like in Austin, Texas, where you did see a big kind of oopsie-doopsie off some of that peak pricing we've seen. The report says that this spring will be important for telling us if this is a longer-term trend or not. So in other words, they're saying, hey, buckle up. Things could actually get a whole lot worse before they get better. So maybe you ought to buckle up and be prepared and be a little patient before rushing to buy. 1 in 37 homes are now seriously underwater, and the least underwater are in the Northwest. So think like, the richer parts of New York and the richer parts of the West, like California, parts of California. I personally note that this is not surprising given that these are the areas with the highest concentration of NIMBYs, the not in my backyard folks. And it's either a result of NIMBYs or the lack of building or both. And specifically, some of these areas also include San Jose, San Mateo, Orange County, so all those coastal California areas, as well as coastal Florida, Palm Beach, and Miami. So not great. Biggest declines in equity were led by Kentucky, South Carolina, Georgia, and then Delaware and Indiana. So some pain there, absolutely, in homeowner equity. But where there doesn't appear to be so much pain is, well, at least in court yet for Donald Trump. Although it might have been painful for some folks to listen to Stormy Daniels' quote-unquote salacious testimony. Her testimony has just had a little bit of cold water thrown on it by the Wall Street Journal editorial board. Now, keep in mind, the Wall Street Journal editorial board, they are, how should I say, they lean right, okay? Now, that's not a big deal. That's not a problem. It's okay to have a tilt with your bias. I always try to be in the middle, which it is like the crappiest position to be in, because I'll tell you, the best example I could give is when I try to be in the middle on the Israel-Gaza situation. If I don't mention enough about the hostages, I get angry emails from Israelis or Jews. That's not bad to say that, okay? They are Jewish, okay? You gotta be so careful. And then if I don't say enough about the loss of life of children in Gaza every single time, then obviously I don't care about children dying, and how could I how could I not when I have 7 children? It's like, oh, can it just stop? Can it just all stop? Can the death just stop? Can we just have the truths that we're supposedly close to, but we're not close to yet? I don't know. It's just a disaster. So being in the middle is really tough. Much easier to just stay on one side, because then you don't have to repeat yourself over and over again that you see on both sides. Then people are like, oh, but protesters are saying from the river to the sea, which is basically trying to eradicate Israel, and Israel has no homeland then otherwise. And then people are like, but what about the outposts and the settlements in the West Bank? And it's like, okay, we're just trying to report here. Keep in mind that we still have no updates on that truths, and still waiting for more insight from what kind of weapon deliveries are going to be held back from Israel for crossing that blurry red line that Joe Biden gave to Israel. Though, keep in mind, if Israel comes under threat, the United States and the United Kingdom will be the first there on sort of the a rescue wagon to make sure Israel is well taken care of. So this whole idea of we're going to withhold weapons, I think, is just political nonsense. Anyway, take a look at this. The Wall Street Journal editorial board, they suggest that Trump is entitled to the presumption of innocence. We can agree with that. Everybody should. Even if you don't like Trump, everybody's presumed innocent before proven guilty. The point of Stormy Daniels being on trial was to prove her credibility. This is true. We've talked about that as well. They indicate that her recollection was almost play-by-play, and usually juries don't require that much detail, and they refer to like divorce cases. That's not great, because it sort of enhances Stormy's credibility, but then the Wall Street Journal quickly tries to pull that right back down. She says in 2018 on 60 Minutes that she didn't want to have sex with Trump, wasn't attracted to him, but wouldn't say no, yet in her book she calls it an out-of-body experience. She then testified that she tried to leave and Trump tried to stop her once, but she blacked out and didn't know what happened next, despite suggesting she didn't drink or take any drugs. So then the Wall Street Journal makes it clear that this is probably the last chance people have at seeing Trump actually get convicted, if that's what they wanted. I suggest that there's a solid highlight here to credibility challenges, but in fairness, this was 18 years ago, so some blurriness doesn't necessarily mean the incident didn't occur. But that's pretty much the core of the case there, in my opinion, is if the incident didn't occur or people don't believe Stormy beyond a reasonable doubt, Trump's free. This is a criminal case, so you have the highest burden of proof here, and it's kind of tough to prove, unless you've got screenshots, as we like to say in the gamer world. Screenshots or it didn't happen. Ooh, well, I don't necessarily know that we want those screenshots, but let's just say there are no screenshots. At least, again, not that that matters, and I'm not imparting an opinion here. Okay, so this gives us a little bit of a heads up of what's going on with Trump. A couple other things. Bank of England may cut sooner and more rapidly than expected. They had their first sort of non-unanimous cut here, stabilizing rate hold. 7.2 at keeping rates stable, but are giving a heads up that they're seeing greater doubt from businesses at being able to pass on higher wage costs. And we are starting to see a low GDP outlook, just 1.25% for 2026. At the same time, ARM is down like 7% in the pre-market as the outlook for their fiscal year missed by 2.8%. This was so freaking minor. As opposed to the $4.0 billion expected in revenue, they reported $3.9 billion for the full year ahead in terms of expectations. This is not a big deal, like super minor. The numbers were actually really good from ARM, but they're just not enough to offset some of that crazy, crazy Wall Street greed. Oh well, so anyway, that gives you a little bit of an overview of everything from, we've covered the Bank of England. It's also interesting to see them talk about ups and downs in data that, we could see these ups and downs just being normal. And Blackwell chips obviously coming from NVIDIA and could accelerate ARM and data centers. No pricing power over at Etsy. That's been clear for a while. It's, I think, one of the reasons the stock has just been bleeding out the way it has. It's one of the reasons I divested from Etsy really right around January of 2023 after having exposed myself to them a little bit in November of 22, thinking maybe we'd get a bottom. Nope, not yet. Still no indication that we're there now. The Seriously Underwater Homes report is not ideal, and we'll want to see if that trend continues or if this is just sort of a one-time oopsies. Blackstone, I think, puts it well in their president when they say, hey, maybe we should wait and see, especially in the face of some of those, immigration numbers that are basically propping this stagflationary feeling up. Not great at all. Anyway, thanks so much for watching this Me Kevin report on number 3. Cheers, and we'll see you in the next one. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than househack, nor am I presently acting as a market maker. Make sure if you're considering investing in househack to always read the PPM at househack.com.